Holding off on this video, but I'm going to make it very quick. All right, today is the 17th of May, a Tuesday, and we just had several fundamentals released for the American economy. Right, there was a meeting with the Fed, the chair Powell. We had some CPI data released. And I saw Ricky Gutierrez do a live stream of all those things. So that was kind of interesting. And I wanted to correlate it over to what we saw today for the market on the right. So here on the 2-minute, it did relatively okay, right? As long as you don't overtrade it. I was just watching another trader by the name of, was it Umar? Something like that. An Arabian guy. And he trades on the 1-minute. I think that's kind of silly, but yeah, he's very exclusive to essentially the first hour in the market open. And if he has a winning trade, he'll take one more trade with reduced scale in, and that's it for him. So I think it could be the same thing for me over here on the 2-minute. Once you find that original entry, man, and it holds, it can really run. And you can really get some exceptional R&R off of it. Right? And those are the two metrics that he was looking at critically. What is the ROI, and then what is your R&R? So from what I'm seeing here, all right, there was some structure in the pre-market for support. There's a break here, and liquidation was set about here. All right, it's pretty high up, so we didn't get that pullback, but that's fine because it's the pre-market. So what you could have done is waited. All right, you could just waited for another opportunity if you don't like what you're seeing there. And I think that would be the most logistical thing to do, because it's kind of foolhardy to use structure of a lower support level and then not be expected to be wiped. Yeah, so you attempted to take it here. Perhaps you put liquidations here. So okay, that held. Damn it. Right, let me check again. 2-1, 2-1. All right, so I'm a bit hesitant, man, to do the rounding for entries, because then you're just making, there's too much exposure. All right, but let's say it was here instead. Let's say we didn't use that other candle. It still holds. So that's interesting. But putting that aside, you could have also just waited for the next opportunity. All right, because if it's going to be a trend, most likely it's going to be a respectable one. So if we do it in that sense, you put lines here, you get your confirmation approximately here, your liquidation is here, right? This is your liquidity zone, and it's a bit tight, right? 226. But you can see the highest close is at, what is this, 236. So they're synonymous once you do the rounding, and then it proceeds to lower lows. And if you get in on those liquidity zones, man, forget it. All right, forget it. You're gonna make money. That is more or less guaranteed, right? So, having all that said, we have liquidity defined here. It doesn't hold when we look to our right. All right, we're getting this really weird permutation right now after the Fed meeting. But you can see that it went to lower lows, and if you look out into the 15, we're actually seeing a continuation of that, that ordinance. So that's a thing. But if we were to use any of the other two levels, I think we would still be in if you wanted to do that. Right? I'm just speculating. But you can see here, excuse me, there's a wipe of one candle only. So yeah, only the original trade would have worked, right? Because the guys in the pre-market, they know what's up, right? They don't need to wait for the Fed meeting to get the information. They know naturally, right? They've done the research. Yeah, so that's that. But furthermore, I think the issue that's really going to determine the success here is not over trading. I think that's going to be a critical element. But at the same time, I don't like the 5-minute. I feel like it's a bit subadequate in comparison to, the risk to reward on the 2. So I also wanted to do analysis of the performance back on Cinco de Mayo. I think that's pretty important for the upload. But before I do that, let's go over to the TQQQ. You can see that the numbers did not work nearly as well. All right, there was some structure like this, and we got confirmation in the pre-market, right, directly, and you got wiped, and then you try to go long because you got this here, which is a reading of 38.8. That didn't go well. And then only afterwards we've gotten another confirmation for the south side, but I have restrictions on that. I've said you could only do one at a time per considerable wave, so I would have been hesitant. And then ultimately we got this play to the north. The entry was pretty solid, not gonna lie. But then we had some pullback. It just kind of diminished the viability for me, in comparison to what we saw on the Aussie, right? I've said you don't want to overtrade, but we didn't get this original one back at 10:30, so I think it's a bit behind in terms of viability. But let's go back over to the Aussie dollar. Let me see if I can get the Cinco de Mayo pulled up. It might be too late already. We're in April 17th. Sorry, we're in May. All right, yeah. So this is the perfect time to do this. Let me get it up. What do you know? What do you know? All right, so we barely have the data here. I can't even tell if this is the 5th of May or if it's of April. Let's just take a look, right? See what we find. So we have some structure here. Structure here. And it plays really well. It's a really solid trade there. Over in London. Then we have New York Open. Keys defined tightly around here. Get a break. SL's there. Bleeds to the south. Wonderful trade. What next? What next? What next? Unfortunately, we're already missing one of the days. The 3rd and the 4th were also pretty important, but as long as we get the 6th in there, that was a pretty unscrupulous occasion. So let's see. Got some lines here. Cross. Ouch. No. Oh wait. There we go. There we fucking go. Alright, you got in earlier. Fuck, that's pre-market. It's fucking pre-market. But like I said again, I mean, that's really the rule of thumb, isn't it? I mean, if you have the confirmation given in the pre-market, how are you going to use different structural points as if it's the definitive? It's not. The definitive is all the way back here. So you can see that we get a lot more respect and reaction at this liquidity zone down here. All right, and yeah, that's a thing, right? But then I suppose, yeah, I guess that invalidates the trade, right? Why would you even consider? Oh no, that's not entirely true. This would still be valid, and that would suck. That would suck. If you wait for the pullback, it would suck less. There's not really much I could say to it. If we were to look for a different opportunity, it would be in this corridor, 852, 858. All right, and that plays very nicely. Right, so you took a bit of a loss. Would have been nice to get this trade here. No cigar. I have hesitations about the pre-market. So that's that. Let's see what we get next. This is New York. 37. Lines here. Get the cross. Right? Because this is 38, 39. Color coding's a bit off. You know. Well, let's say it holds. Let's give the benefit of the doubt. You put the line 66. Don't you just love when the phone starts playing games? 66, 60, 67. All right, so it holds just barely. Just barely, but it holds. And then it plummets, giving you infinite amounts of return on investment. Yeah? 7th. Oh, God. This is a nightmare. That looks like a confirmation for entry, unfortunately. You also get wiped to the south, unfortunately. And then you get, like, what the fuck? That sucks. So my rule of thumb, I think, is to take 3 trades, give it 3 tries, and if it doesn't work, leave it alone. But this is a big problem. So you would take a loss to the upside, you would take a loss to the downside, and ultimately it would go south, but you wouldn't bother. And then there would have been another one here. Oh, man. Let's see. Come on, mitigation, please. No mitigation. There's another southward opportunity around here. And then there's a play to the upside. Market was not good. It was not a good market. And then we have some structure here. Huh. This was a bad day. Tried to go up, it didn't go up. It tried to go down, it didn't go down. It's a lot of chop. So what? So that's like 1, 2, 3, 4 losses. The only way to fix it is if you have a 1 to 4 R&R. You have a 1 to 4 R&R, everything's straight. So you got lines here. Try to go south. Pullback isn't brilliant. 7.5 down to barely 10 points. Then it pushes for more consolidation. What the fuck is this? Oh man. Tokyo was shitty too, I'm sure. It's a lot of losses, I'm not gonna lie to you. It's a lot. And we got a break here, then we went south, and that actually was a good trade. And then we had a play here in the pre-market. Can't get a break. Entry at 828. Tough pill to swallow. Market opens and somehow there's nothing to work with. Don't know how that's possible. 1800. South play looks great. Wiped. Upside. Looks great. South. Looks great. So I'm trying to be transparent, man. Even on an emotional stance, like I'm not trying to euphemize the situation. This is taking a huge toll on my psychology. But yeah, we're looking at about 5 losses, if not more. And that's it. That's all I could do. If the R&R is at 1 to 4, those 2 trades would have fixed it. It would eliminate the losses. Simple as that. It's not rocket science. So if we go to the 7th? Try to take price north. Doesn't go great. Try to take price south. Doesn't go great. New York opens. Got lines here. Got lines here. You get southward momentum. Get your entry here. The risk is high. Could wait for the pullback. It's not really a great trade. And you try to go up. Wait for the pullback. Guess the market's already closed. So for this, nothing great there. 1800. Try to go up. Liquidations down here. Does something. Nothing overwhelmingly brilliant, but it does something. It does like only 14 points, 15 points. Let's see how it looks on the 15. Off to a great start. I can't seem to find the data point. We have the 6th, and it goes to the 9th. GMT, I think, is ahead of us. It's about to go into the 18th. And we'll still be on the 17th. So, when we say the 7th, for them it's the 9th, I guess. Alright, that looks kind of choppy. This also looks choppy. Let's just do the 6th and forward. You could try trading it like that. You would get some movement. There's pullback in there. You try to go north on open. Would it work? You try to go south. 1545 pre-market. That would have been more sensible, I guess. It's a bearish trade. It's a bearish trade. Right? So you would take it to the south. That would be fine. Get the new market, a lot of chop, get keys, continuation. Looks great. All right? You see, this is a really weird permutation. This is super weird because I don't even know how to think of it. These are all resistances, I think. And so the pullback, if you want to take this bullish, you would have to break above here, yeah? So this is very bearish, a very bearish indication. You just need to get the polarity, get the OB, and take it lower. All right? So those are those days that were very tumultuous, very unsettling. But here's the conclusion. I'm not even going to bother with the TQQ. I think the Aussie dollar is still a great security. And I just feel more comfortable with it. For analytical purposes, the NASDAQ, it's just more susceptible to earnings reports and federal press releases. So I don't want to talk about it. But yeah, the conclusion that I have, as you can see, is the 15-minute has been performing exceptionally well since Cinco de Mayo. Like even this week, it's been blasting opportunities. Look at this. Tokyo was amazing. Yesterday, New York was amazing, but it was amazing on every time frame. It was good on 5, it was good on 2. Day before that was pretty good as well. And it's not to say that it's preventative for you to get into the, those supply zones, those liquidity zones. So my conclusion is, once Cinco de Mayo hits, once May starts, go on the 15-minute. Maybe diversify. But then I also think that there's still opportunity on the 2-minute. There's opportunity, but I have to be very conservative with the R&R and just not overtrade. Because when the shit hits the fan, as you could see, it's not going to be pretty. So this is what I think. I think it could be wrong. Could be fucking wrong. But if you have turbulence in one market, maybe you should hold off for the other two as well. Let 24 hours pass and then proceed again. Try it again, right? So the 7th, you don't like what you see in New York, don't trade Tokyo, don't trade London. Following day, if it's the same thing, skip the 2 markets. That's all I could think. That's all I could think of. Otherwise, the 5-minute is probably good for Q4 and Q1. But we'll just have to play it as it comes. Play it as it comes. Because the 15-minute is pumping. And I think it was around this time last year that I was starting to get really back into trading the 15-minute. Right? It was after the US 30. I think is when I was starting to have fun again with the 15. If you look over on the gold price, it's the same thing. It's not going to be like it's 100% accuracy. But look at these opportunities. That's still a great opportunity in terms of R&R. This one was a great trade. Right? It's in profit. And I don't like gold. So that is saying something. Pull back here. Structural point could be... Let's say it's here. That trade would not be brilliant. It would be better if we could use this over here. Yeah, man. It's just a matter of like finishing this. I just want it done. Whether it's a win or lose, I just need to get it done.